Well, good morning and cheers to another lovely trading day. Retail trading team. So, we're going to call this a routine briefing. I'm still going to do those debriefs at the end of the day where I will dress up for you and we'll have kind of a more formal overview. I just want to still include these little morning sessions just to kind of talk about what's going on, what I'm looking at, and as anybody comes to the chat, I'd like to hear what you're looking at too, just kind of touching base before we do the whole making money or losing money thing, whatever the day has in store. So hopefully today we'll make some money. I got my first trade going here. I did actually miss a short. I was looking for kind of the same thing that shot me in the foot in that one account as I talked about yesterday. I was looking for that long. I had that assumption. I didn't take the short trade there, so I would have not stopped out. I would take a profits here for about 10 points, which is nothing to be disappointed about. Yet I didn't take that trade earlier, so I do have this long going on here. I got in a little early. Technically, price has to hit that yellow line for me to get the signal. Yet I'm pretty sure we're gonna hit that yellow line, so I just went ahead and jumped right in and watching to see what happens here. So big picture, what I got going on here is I'm just kind of looking at, if you go to that routine day trading document, there's I think I still called it sit. I'm tweaking a little system here, which is what I'm showing you. I think it's the most user-friendly system, we'll say. I think it works for pretty much any account size. I've never gotten past 5 accounts, and that's really the point here, is to come up with something that everybody can use, everybody can benefit from, and that returns better than your standard active investing. Some might call that alpha. So let's see what happens here. So we do have a signal as soon as we get a higher high relative to that prior candle. So like I said, I got in a little early, but if you want to be technical, right there is going to be the perfect signal. So that's what I got going on. I think we should just pop into the warm-up document here just to review what the price action is telling us here. So again, warm-up document is going to be in the description of this video. That routine day trading document, all our resources are in the description of this video, so it's all there for your convenience. I'm just going to wait until I want to see us tag that yellow line so I don't have to stare at this, make sure I don't have to scratch it. So just kind of give it a second here to develop. I'm going to go through my notes from the debrief yesterday and see if there's anything particularly relevant to talk about. Okay, there we go. So I'm going to move into the warm-up document, and then we're going to cover kind of that price action. And again, super informal, just trying to discuss what's going on today, and we'll do the formal debrief later. So if you haven't seen that debrief, go to my YouTube here. It's the first video. It's called Routine Debrief. I'm going to move it to a separate folder, so we're going to have a briefing folder and a debrief folder going forward. And I'm going to kind of keep that debrief nice and formal with that slideshow. Based on my engagement with the newsletter, which I haven't checked again, it looks to be about as good. And then if I look at the video itself, I mean, not that you guys care, but I haven't looked at myself, so I'm kind of curious. So just bear with me. In terms of that video itself, doesn't have the same engagement, so we'll see. I may move back to the formal briefing here, but I think it's better at the end of the day, at least for me. I can give you higher quality content. So let me know what you think. And that newsletter does come out in the evening for this test until it either fails a test or something else changes. So let's hop into this warm-up document and just get a quick, oops, that is my OBS screen. Very good. So let's get a quick check on our bearings. Overnight inventory, again, I think it's why you saw this continuation. You do have that down and balanced. There's really no reason, or no corrective reason, at least early in the day here, for the buyers to come in. There's no imbalance, I should say, is the correct term. So that's just what's going on there. No surprise, we do have this continuation. You also had that open auction early in the day. So you did have chop until the direction was decided here. So that opening price is going to be pretty important, as it always is, as the day moves forward here. But I think really what we'll be looking at is that trend line, and when we get to price action, we'll go from there. Besides that, right now we do have the developing double distribution on the TPO chart. I'm going to check it as we speak. Yep, that's still going on. So we're still kind of hanging out at the bottom of value. So this is definitely a knife catch long, and we could keep going lower. Yet if we do break above this 82 area, I think it's a pretty quick move back to test that POC at about 91 and potentially moving a little higher there. So we do have the double distribution look though, so we're going to watch that single, which is right near that POC, to see if anything changes in terms of sentiment or other price action cues. One second, I gotta close out some windows here. All right, cool. And then besides that, you can see our expected move zones. We are currently below it on the SPX. So yesterday was well within the expected move. As I said during the debrief, we closed at 0.00%. I do not remember it closed at 0.00%. I'm sure they've happened many times, but that one will live long in the memory banks, as they say. So as we speak, we're kind of right near the rule of 16 low there. That also the routine EM is just my calculation, so I wanted to call it a cute name. So we're just near that expected move low, which kind of makes the bounce here a bit higher probability than not. So that's why I have a nice tight or nice wide stop. I want to give it some time, and now that we have the signal, I'll be looking to add on the way up here. My first add being at about 86, and so we'll see what happens there. Besides that, on the stock, you can see the levels. These stay updated throughout the day. This is not, so we're kind of in between two of my major levels, almost directly in between, hanging out here at about this 417 area. This is not a significant level zone for me, if you will. So I'm not playing any of those scalp trades. This is just purely a trend trade. I'm betting on this being the final edge of the corrective leg that will take us a little higher and potentially resume the uptrend. So we'll see. We do have a gap here, I believe, on the SPY. Let me double check. Yes, we have a gap here on the SPY at 420. So I want to actually add that by gap. The level is included there, but I didn't realize it was a gap until I just looked at this chart here. So we do have a gap now at that 420 area. So watch what happens if we do try to recover that. Remember, 48% of the time, gaps are recovered in the same day. So that's why I got going on the warm-up document. I'll keep that updated throughout the day. In case you missed the debrief yesterday, you'll notice I do have a bit of a different structure. Again, that's just for simplicity, and I talked about the importance and helpfulness of this chart here, and that is, I'm actually going to extend it a little lower, even. Part of my neuroticism. There we go. So that chart is helpful as well. So that is the warm-up document for today, and you can access that once again, description of this video, and it will stay current. So those are the major levels I'm looking at. Let's move into the price action side of things and see what we have cooking there. Okay, so you're seeing we're getting the recovery of that 81, 82 area for now. I'm going to watch here for, I'm watching on this screen here. Let me actually move to a different chart. Watching on this screen here for when we do tag that 86, I'm just going to add and move this first one, this first contract to break even. And that's kind of how I do this little scalp play. You can learn about those mechanics once again. Go to that routine day trading document. I know I sound like a broken record, yet I have heard that some people don't really know what I'm talking about half the time, so I did create that section, that sit section that has pictures, illustrations, all that cute stuff. So it should be more clear than Fabio was in the past. I'm obviously, I shouldn't say obviously, I'm merging this with Fabio, yet they're slightly different strategies. So until then, just I do have them separated, and I will eventually merge them once all the backtesting comes through. Yeah, anyone who has done backtesting before knows backtesting takes a lot of hours. I've actually put in now over 1,000 hours into this one Fabio backtest, so possibly more than that, but definitely more than 1,000. So just kind of bear with me. It needs to be correct, or it's just another BS backtest, and you see a lot of those. Not to say any names, but if you go to Taste Trade Options Group, if you're a member of that, you know exactly what I'm talking about. So moving on from that digression, let's check out our most important charts, starting with that weekly chart. So really on this weekly chart, I don't see too much that's relevant today. So I may talk about this in the debrief, depending on what happens throughout the rest of the day. That you can just kind of see where we're nearing various zones that are really from that daily chart. So just I want to pop right into that daily chart. You can see the POC here is about the same spot as it's been, so nothing's changed there. So if we pop right into that daily chart, you can see we did put in a nice swing high yesterday with that rejection. So we do have a gap. It's not showing on this chart just because I'm not exactly sure why that gap is not showing in this chart actually. I saw that happen the other day, so you know what? I'm not going to talk about that gap. I'm going to have to maybe check my data, make sure it's correct. I don't remember us. Oh, we did. We did hit this low yesterday. Silly me. Silly me. So we do not have that gap. So scratch my gap comment from earlier. But we do have a significant supply zone there. And when you go to the TPO chart, I can show you what I mean. So you have it on the price action side of things, marked by that red candle, and you also have it on the volume side of things, as you'll see in the TPO. Now, before I go into that TPO, I just want to point out a crucial level that we're relatively close to right now is that 415 area. That 415 support, if we do continue that trend lower, is going to be, I think, fairly strong support. So we're really chopping between that swing high we put in yesterday and 415 support. If we do continue to go lower, that 412 area is where that trend line is sitting. And that's also where there's a very large demand zone. I don't think the bulls want to see us get much lower than that. And once we start breaking the trend line, we can talk about, I think, a potentially stronger move to the downside. Yet, really, before anything, volatility has got to get out of this descending triangle. And you're seeing it's trying right now. It's kind of hanging out on the outside. It's got rejected once yesterday. It's trying to push higher here. Yet, for me, that doesn't really confirm until we get to 1970, 1980. As it stands, volatility is still very bearish stance. As it stands, bearish stance. Uh, Anyways, volatility is still bearish, in my opinion, below that 1970 to 80 area, and especially as it continues to diverge here. So what that means, that divergence means, is the market has made a lower low, yet volatility has not made a higher high. And in fact, you're seeing divergence on the price action chart itself. If we go to the 50, if you look at the 50-minute here, you look at that RSI, you can see we're making higher highs in RSI as price makes lower lows. So again, my opinion, lending to the bull case there. So besides that, we'll just look at the TPO real quick, and then we will end this little powwow. I don't see anybody in the chat, so no opinion, no point hanging around here. So this is why you can see what I'm talking about in the TPO, that double distribution look. You do have this bit of volume right there near that single, right above the morning's high. Yeah, right now we're kind of building time and volume lower here. In fact, you see the POC itself just shifted down, so showing that the bears are still in control of that auction. You saw the single here did not really lend any type of support, and so as it stands, we are still price still favors the bear. The bear volume favors the bear. This is all short-term intraday here because long-term that trend is still up. So what happens here if we do lose this low, we continue going lower. What's around that 415 area is going to be that 41.53 naked POC that you see on ES here. So things are really clear. It's really nice to have a wide IBR. We had an IBR of 30 today. So we'll see if we don't get that nice rotational action with opportunities on both sides. And I'm just happy to have a market again, at least for now. So we'll see if it holds, and I will see you for the debrief in the afternoon, which is when I will also release that newsletter. Until then, you can find me on Twitter at Routine Trader. I'd love to talk to you there. I'd also love to interact with any comments in the comment section of this video itself. And as always, I appreciate those likes as that helps with the YouTube algorithm. So I will see you this afternoon if you want to come hang out. Until then, stay classy.